Hello again, Howard Wayland here. I would like to again talk to you about probably the most important thing for any business beginning, and that's the business plan and visualizing that dream. Even if you're not raising money, this is a very important process. For nothing else, it clarifies in your mind the systems you'll need to create and the steps necessary to be successful. So that's why it's important. Also, it's the tool you use primarily to get people interested in investing in your project. What we'll cover is to explain the purpose and objectives of the business plans. Why do we have them? Give rationale for writing or not writing a business plan when starting new ventures. There's been big companies that have been successful without a business plan to start it. However, nearly every other case, you nearly need to have one. But it's your decision. There are different types of plans. We'll discuss that too. We'll describe preferred content and format of a plan. There's an industry standard. They don't say it necessarily. Nobody says, here's what you've got to have in the plan. But if you see a good plan, it'll have these steps in it, which we'll go over. Offer practical advice on writing it. We're going to give you some hints. We're going to give you some tools. We're going to give you some places to go to see award-winning plans that have gotten money. I'm going to show you some of the plans that I've done in my business, opportunities for businesses that I've had, and you're very welcome to, use the content. A lot of the disclosures too, you can definitely use for your plan. Explain what investors look at in a plan. We're going to tell you that. Identify available resources to assist you in a business plan. There's software for it. SBA has some good resources. I'm going to give you some good resources. We're going to maintain proper perspective when writing it. We're going to say, you got to really put yourself back and look at it in an objective way and really start thinking clearly. People think, well, I don't have any risk in this business. Sure you do. You really know there's risk out there. The one risk is if we have a contagion in Europe. I mean, if there's a complete meltdown of the financial systems, your business is at risk. That needs to be identified. There may be something that happens in your industry that'll make it at risk. You've got to identify those. Go over some basics of the business plan. First, what is it? It's a document that sets out the basic idea underlying the business. In other words, it's telling people why you're creating the business. I mean, what benefit to society are you giving this business? Can you make the goods, bring them to market cheaper? Can you bring a better product? Can you make a new product that varies from the ones like it that will substantially increase the savings of time and energy? Do you increase the speed at which something gets to a place? All of these are value propositions. Value propositions. And those value propositions are important because you've got to have one, or else nobody really needs to buy your product. And secondly, you also have management's expectations for business in there. You really are got to think through, what are you going to need financially? What are you going to need for people? What are you going to need for capital to execute your plan? And you're going to have to take these in steps. The purpose of your plan is also going to be important. Identify the nature of the concept of your business. I mean, people have got to know, what do they want to invest in, or what are you doing? Present the entrepreneur's approach to exploiting the opportunity. I mean, what do you see out there that gives you a great opportunity and success potentially for your business? People want to know that. You say, and I say people, we'll talk about who those people are, but there are several groups. Identifies factors affecting the venture's success. I mean, you've got to give them risk factors. If you're in the, let's say, in the mortgage business, a risk factor would be if the rates went to 18%, you're not going to make many loans. That's going to be a risk factor. However, if you're servicing the loans, that'll be a great benefit because, quite frankly, if you've got 3% loans and it's now 18%, nobody's going to refinance. They're going to stay in the house. But you're going to have that identified. It serves as the entrepreneur's tool to raise capital. This will be your main tool. Now, you may have to make it into a private placement memorandum, which we'll discuss too. But most attorneys who are doing the private placement memorandum, which is a document that you go to accredited investors with for raising money, will base much of it off of your business plan. Provides a blueprint to operate the business. I mean, it gives you something to work with. What do I have to do in steps in each of these categories? What kind of resources and people do I need? As a matter of fact, the business plan will be helpful in getting people. If you've got a company with very little money and you're starting out, you may have to have somebody that knows what they're doing in a particular category. You're not going to know everything about the business. Let's say you need a CFO. Well, why should a CFO come to a new startup with a couple $1,000,000 in capital? Why? Oh, you'll offer from stock. Oh, great. A private company stock doesn't mean very much. And he maybe had a good job now. What makes him want to come? Largely, it'll be due to the plan you show him and say, here's what we believe we can do, and here's why. That will give him the moment. That's another interesting party who might want it. Here's some of the users inside the entrepreneur, the management team. Like I said, getting people who are the key employees and the key employees. That'll give them a blueprint to work with. Now, I put potential customers in here. Let me explain that a little further. If you're a brand new business, vendors are very hesitant, especially top quality vendors, of signing you up because they do not know if you're going to be able to pay the bill. As a matter of fact, they may want cash on delivery to order some. So or a line of credit or something to protect their interests. Showing them the business plan and where you have niched out your market might give them more interest in potentially being a valued vendor for you or a customer. Lenders, lenders going to know what you're doing. If you can't tell them, they're not going to be interested. Now, most lenders on this are going to be more of the angel investor types and family and friends. It's not going to. You generally can't go to a bank with a brand new opportunity and hope the bank will go with it. Suppliers. Who are your suppliers? Again, just like the vendors I mentioned before, are the customers. And investors. If you're going to go to a venture capitalist, you're going to go to a private investor. If you're going to go to family and friends, if you're going to go to an angel investor, all of these people are going to have to see what you're doing to get interested. Primary functions is to provide a clearly articulated statement of goals and strategies for internal use. Basically, where are you trying to go with this? Your business, small or large, is going to be broken up into parts. You're going to have three main functions. And I'll keep always saying this. There's only three functions to business. That's getting the business, doing the business, and accounting for the business. Now, if you're getting the business is sales and marketing, doing the business is operations, and the accounting for the business is basically doing the accounting and functions necessary to meet government regulations and just the general business itself that you've got to do to clear it up. Now, these statements tend to be articulated, and you may have somebody in charge of each of those functions. They need to know where you're trying to go. The people in accounting or especially your CFO may need to know how much money we need to raise so we can buy the equipment, buy the product, buy the base to manufacture something, or whatever services are necessary, what equipment you'll need, and people you'll need to arrange for a successful launch. Imposes discipline on the entrepreneur management team. It will also keep you from trying to go outside your basic plan. Doesn't mean that the plan has to be followed in such stringent ways that it can't be, but when especially if you're a starting company, you're very limited on resources, and it's very dangerous to go out and gather more opportunities because you're going to stretch your resources even further. I'm not saying if you have a product that's done real good and there's a secondary product that can go right with it that you can't look at it, but you really have to think twice, and that's what the plan kind of disciplines you to keep in step. It serves as a selling document to be shared with outsiders. Now, it's not every outsider you want to share it to, but if you're looking for a big contractor to show how this will work, if you've got something that can be changing manufacturing of a particular company, it's going to be very hard to change it, but if you can save them substantial amount of money and bring benefit to their process and to their final product themselves, you can use this document to show that particular company, how you're going to accomplish it. It provides a credible overview for prospective customers, suppliers, and investors, especially when you're first starting. It's hard to get those. Helps secure favorable credit terms from suppliers. Look, I've got this, but I really need 30-day terms or 60-day terms. It's going to be hard to get at first, but this might be a document that can help. Open approaches to lenders and other sources of financing. You might find somebody who says, I really can't set up capital, but these machines, I can get you some lease machines and do the lease for you, if that'll help you, because I like your idea, it's credible, and that gives you some other sources of potential financing. How much business planning is necessary? Now, there's going to be a lot of you out there who are just going to do a mom and pop business with a website. You don't have to go into a giant business plan, but you do need to have something on what you're trying to accomplish. The second groups are people who may be doing small business, a small internet retailer, but may do some things on the weekend. Again, a small business, but a little more detail than just a basic website one. But you may also have a vision that you have some products that are $200 or $300 million in sales once they get launched. You're going to really want to do an intricate, detailed business plan for you and your management team, and I promise you it's not easy. You're probably talking about 45 to 90 pages, and you're going to have it backed up generally with a marketing plan from a third-party vendor. So you're going to have to do a lot more to that type of plan. But the factor affecting the extent of the business plan is cost and time and money to prepare the plan. I mean, every time you spend in planning is a day you're not selling, or time you're not selling. A good business plan, I had a big business, for me took 200 to 400 hours. A lot of time. But that was the first one. Now, I redid them every year at about 20 to 30 hours because I was just having to tweak what we were doing. And I got it by the third year. I knew where the plan was going, and I hit the numbers nearly every time. So you can really use this as a tool to help measure your performance for the next year. Management style and ability. Do you have the capability of doing a really detailed plan? If not, hire somebody. I mean, it may cost you a few $1,000s, but a professional plan is always important. Preference of a management team. Investors want to know who are the people running the company. People with a lot of experience and been successful at business with a lot of years is important. And the management team is a big portion of that. But a lot of that, if your management team does not have a lot of planning experience, their part of the plan that they may have to do may be minimal. It's going to depend on your management team itself. The complexities of business. Like I said, if it's a simple business that you're just trying to make money on the side and make $1,500, $2,000 a month to start with, you don't have to have a complex plan, but you want to have executive summaries. You want to have some marketing plan in there, a little bit of what, who you've got marketing. Great if you've got contracts that started out, and a lot of small businesses start out because they got a contract. Those are all important items you can put in a plan. It doesn't have to be complex, and you want to do finally some kind of financial assumptions and projections called a financial pro forma. It'll have the balance sheet and income statement projections for at least a year. Generally they're 3 to 5 years, but for a small company it can be just a year if necessary. Your competitive environment. If you've got a new product that has no competitors, you don't have to do as much on your plan, especially when it comes to your competitors. If you don't have a lot, you'll have to do more, so keep that in mind. Level uncertainty. If somebody doesn't know what you're doing, you really have to spell out what you're doing. The angel investors and investment bankers who do venture capital don't necessarily know anything about what you're doing. Now, they're probably not going to invest if they don't know anything, but let's say you're going to a venture capital firm that loves engineering deals, in the electronical type of engineering. You go to them, they still will not know exactly what you're doing, but they'll probably gather and grasp the concepts pretty well. The more your product or services is really outside, or something is new in the industry or new in altogether, the higher the level of uncertainty, and you're going to have to be more detailed about how you're going to produce your product or your service and why it's needed. Really let them know how the value proposition works and the steps to get to there and how it's going to make so much more benefit to the customer. If money is to be raised, I mean, if you're not raising money, you can do a plan a lot simpler for your own internal stuff than if you need to raise money. The more money you need to raise, if you're going to have to raise several $1 million, you're going to have to get with a really strong business plan. If you're raising $50,000 and you might have some family and friends, it doesn't have to be complex, but it's going to have to still be some. If you're raising nothing, you want something just to your people coming in know what they're doing. You don't have to have nearly as much. Expected size of business, same thing. If you're launching a business that you expect $250 million of revenue in 5 years, that's a totally different plan than if you're doing an online business you expect to make $30,000 a year from. Totally different. The complexities are different. And those are some of the factors that give you the extent of the plan. Vision, business vision, size business vision. Good business plans don't ensure success. Don't put in there, we guarantee this will work. You don't. You tell them what you're doing, tell them why you're doing it, showing the financial projections that you believe that will occur, show the financial pro forma, the income statement, how it's going to make profit over time, how long it takes to break even, how many personnel you're going to need, your management team, etc. But never say it's going to be successful. You can never say that, because no matter how great your plan is, your business model may be super and it may work great for a while, but a new concept comes up and wipes yours out. That can happen. And so you really have to be careful on any kind of guarantees. Also, we'll have some statements to put in there for forward-looking statements. Forward-looking statements is, here's what you project or perceive is going to happen, here's what we assume, etc., etc. You assume 3% inflation, and you assume a growth rate of 10%, whatever the assumptions are. If they're not right, and they won't be, it's a guess, an educated guess maybe, but it's a guess, then it'll never be exact. So you have to put in there this forward-looking statements that we don't guarantee that these are accurate, etc., etc. It's the best in the managed business, and we'll have those disclosures for you. But you really want to have those protections to not guarantee anything. Effective implementation is what succeeds. If you really execute the plan the way you desired it, get the capital you needed, and get the people you need based upon what your plan says, and you didn't miss anything, which you probably will, but if you did miss anything, you execute the strategies in place on the marketing, on the finance, and on the production side. You can implement that much easier with a solid plan. Writing a business plan is an ongoing process. I mentioned I did it every year, every January, first 2 weeks. It was slow in our business, and I always went to doing the next plan. How far off were we last year? How good could we do it this year? What can we do better? What are some costs that we didn't foresee that came up that we need to put in the strategies for this next year? What are some other potential markets we're looking at that we weren't looking at last year that might be a possibility? Those are the types of things that we change in the plan. So you always update it. You can even look at it quarterly and update some things quarterly. Ooh, I'm going to need some more people from this, or I'm going to need to do more marketing costs for this. Whatever that is, put it in the plan. Let's get it accurate. See if you're going to have the resources to do it too. The process is just as important, if not more so, than the finished product. This is such a true statement. Here's why. This process makes you think over the steps necessary to make your business a success. Whether it's currently an ongoing business, it will help you move it to the next level. Or if it's a startup, it'll help you in the processes necessary to get your business started. Keep that in mind. The plan represents what has been anticipated. A good entrepreneur adapts a plan to fit the unexpected. If you thought a particular marketing method was going to work, your data showed it work, and it doesn't work, don't put more money in it. We're going to teach you in the marketing section how you basically will manage your marketing. Put your money where your marketing gets the most return on investment. That being said, you may have to adapt your plan to a different marketing method that is successful. Don't be tied to it so stringently and so dogmatically that ends up taking you down. Just modify it if you need to. There's two types of business plan. A short plan, which is for the simple people, and it can be a little bit longer than short if you've got to raise some money, but it covers the most important issues and projections. Again, the process of thinking out what you need is just as important as the processes of trying to just put something on paper. It'll help you think through what you've got to complete. A comprehensive plan is going to be a full business plan that provides an in-depth analysis of the critical factors that will determine the firm's success and failure. It'll also come along with the underlying assumptions, what you're needing people, what your expected break even is, what your expected cash flow will result from it, etc. Now we're going to go over several things for preparing the plan. On this particular video, we're just going to go over what a comprehensive plan has. We are not going to go over each step. We'll have part 2 and part 3 to do that, but we'll get it started. Criticals in preparing a plan. The content and basic format of the plan. Factual support of the concept. Any third-party data support is imperative to put in a good plan. People don't care what you've looked at in the marketplace. They care about what like the Mortgage Bankers Association says for the next 2 years of projections. Or if you're manufacturing widgets, the Widget Manufacturing Association, or if you're in the service industry, what do they say about your data? There's a lot of it out there on the internet you can get from those. That's what they're going to want. You want to have factual support. The effectiveness of your written presentation. Believe it or not, and this is where people don't get it, I don't get it when the politics goes around, but every single trade journal, every single newspaper, every single news organization always tries to present a point of view. The same thing's going to happen in your written presentation. You should make your particular product or service as you're starting look very appealing to the outside world. You want it to be positive. You do want to state the risk factors, but you want to say why it's needed and why everybody can't do without it. That's real important. Clear writing that is effectively communicates. There are people out there, and I can get you some names that can review yours, that are professional writers. They write books for people, and they can get you a very solid rewrite and get your concepts put out there in a very clear and effective manner. Deciding the content. Your team. Do you have really strong team with lots of experience and a lot of planning experience? The opportunity, is the opportunity really big, or is it's a good opportunity, you can make some money, but it's not a $100 million opportunity? The resources, remember, if you take time for a plan and it takes several hundred hours, it's several hundred hours you really need to go make money from the other. And if you're having to do it part-time, you're talking about 2 or 3 months. I don't want you spending all your time planning. When you're launching a company, you spend your time selling and getting things working. You can do them both at the same time. Just have an idea where you're going. The deal structure. If you're going to be looking to raise capital from a venture capitalist, you're going to really have to have a top-notch plan to be successful. The big picture. Is a big picture or a little picture? But depending on that, depending on what you need. And here's a typical outline. Again, it's not necessarily just in concrete, but just look at a cover page, which we'll go over in the next video, what a cover page should have. And I'll have some there for you so you can look at as resources in the resource section. Tables of contents. People might want to see what's the marketing plan look like. They don't want to flip through 30 pages. They want to go to page 16 where it starts. That's what they want to go to. Executive summary. Anybody who's going to invest is going to look at your executive summary. Matter of fact, you should have it separated from the rest of it. Matter of fact, when I say it should be in the plan, but you should have it in a separate Word document or PDF file. And the reason for that is people say, let me see your executive summary. If your executive summary should be a page, no longer than a page and a half. If it doesn't fit on 2 pages in a 11-point font, you need to redo it, because these are highly credited investors and people who run billion-dollar firms, and they want to read it and see if they're even interested. If you make it a 5-page executive summary, I'm going to toss it aside, not even look at it, and just say it's not for us, and you're not even going to get it read. Executive summaries are probably the most important document. Your industry, your target customer, competitive analysis, who's your competitors, what's your industry, what is this company? The executive summary is going to cover a little bit. You're going to do more detail there. The company description: is it new? Has it been in business? How long in business? What do the revenues look like? What's the prospective, the prospects for it look like? Products and services. What do you offer? What are you selling? What do you have as a value proposition that people need from your company? You got to have that in there. Marketing plan. That's a hefty bit of the business plan. And it's better to get nearly all the information from outside resources, or have somebody get it for you. In other words, pay for outside services. And you can do a lot of lookups yourself. There's always industry associations that can help you with that information. Just look it up, get it. You might have to pay a little money, but get that information from them. It has more credibility than from you. Operations and development plan. How, especially if you're new, how's your operations going to work? Who's going to head up which part? You'll want a diagram of your management team and what their responsibilities will be. How you're going to operate? Is it going to be, is it going to be in multiple areas? Is it going to be in one headquarters? Is operations going to involve a manufacturing? So you're going to have an office as well as a plant. Is it going to involve warehouse space? How much development? How are you going to get your products there in time? Are you going to use lean manufacturing methods? These are the types of questions you'll answer in that part. The management team. Who's the head guy? What's his experience? What's his experience in this field? Those are the things you'll need. What's his credentials? Does he have a CPA? Is he a lawyer? A JD? Is he Six Sigma certified? Is he, those types of things, especially in your industry, will be a help in terms of them giving credibility to the team. And having a group of people, having one person on the team only, a CFO or CEO, if you're going to raise money, it's hard to do that. You really need to have 3 or 4 people on a management team if you're raising money, at least, and sometimes 5 or 6 depending on the complexities of the business. What are the critical risks? If you're making copper wire, critical risk is the price of copper. If copper goes to $12 a pound, you may have more difficulty in that. So keep that in mind. Offering. What are you offering? Are you offering a stake in the company? Do you want to give them a return? What are you trying to offer to them? Financial plan. That's where you're going to give a page of assumptions, what you're assuming. And in my case, I always do a spreadsheet with the 3 areas: income, cost of goods sold, and operations. I put in there the expected expenses, etc., and the number of people I'll need for different sections, and then I roll it all into an income statement. I also use that particular piece of paper for the assumptions, and I give general assumptions, like I assume 3% inflation. First year I might have 35% growth, and second year 15%, and the third year 10%. But I'll give them what I'm thinking so that formulas they can see and look and make sure that your formulas are right. And they want to see what that'll do. They want to see if it makes profit. They want to see if when you break even. Does it take 2 years to break even because you have a capital investment? Maybe. I've seen plans with 4 and 5 year break evens, but that's okay. They've got to know where it's at, but you want to plan for it. Obviously, a 4 or 5 year break even means you're going to have a lot more cash than if it breaks even in the 3rd month. And then you want to have an appendix of supporting documents. And what that generally is, let's say, I see a lot of people start businesses in this way. They get a contract from a company that they can supply something, and that will cover their expenses for them to be there. So that contract, it may be a year or 2 year contract, that's an important feature. If you've already got a contract where you're going to get $100,000 a year on a new company, that's a real strong start. And having that contract in play is good. You may have only a letter of intent or a MOU, and that's memorandum of understanding basically. And what you're really wanting to look at on those is how strong are the customers that you are, or the potential customers, and what does the letter really say? It says, yeah, I'm interested in doing it, but that doesn't mean they're really interested in doing it. It kind of means that they kind of are interested. So that will be how it's written will give you either more support, or it actually will help hurt you in credibility. Could be either way. Well, let's review. There's needs for business plan. It's both internal and external to help you focus on what's it going to take to be success, but also for the potential of raising capital and getting suppliers, vendors, and potentially a solid management team. The use of the business plan is both, again, internal and external to help keep you focused on what you're trying to accomplish in your business and continue to look at your value proposition and your mission and value statements and how it's going to be formulated with that plan. And it also, the use of it will be for outside, trying to get, like I said, vendors, lenders, potential raising of capital. And the types of plans. There's a short one that's just going to be basic for you, since you're not going to be raising money. Maybe a little longer one that's still a short one. That'll have a marketing plan and financial assumptions, management, and basically executive summary. And that will be for the ones you might be raising $30,000, $40,000, maybe friends and family. And the last plan that you've got is your comprehensive management plan, which lists the things I'd mentioned and which we're going to go into in more detail in the next couple of videos. Training seminars. I'm looking forward to continue to help you out. Get at it and keep at it. Never give up. Thank you so much. Bye now.